All right, Evan, welcome back for another episode of Carnivore Trades. Today is Sunday, October 17th, 2021. We're looking at the price of spot Bitcoin here on TradingView, obviously above 60,000 now, really on the back of the news that the ETF has been approved and will actually debut as soon as this week. So Bitcoin getting through this trend line here of resistance. This is the major trend line that I've been referring to for quite some time, really since we broke down. We had the MA head and shoulders pattern, and we went down to 30,000. We've chopped around since then. Obviously, we are through that now. And we have the double top here at 65,000, obviously. Now, whether or not that holds remains to be seen. We'll probably know within the next week or so, as there has been a lot of hype with this ETF that has been approved. And this is not going to be so much a usual technical analysis video that I do, more so just me explaining how the ETF works and how it's really not that validating for Bitcoin as a long-term hold or anything, or legitimizing, and more of a video how I think market sentiment affects price, and just a urge of caution to potential investors. So a lot of investors are excited because they say that the ETF legitimizes Bitcoin as a legitimate commodity or asset or forex or currency, whatever you want to call it. And then there's others, myself included, that say, well, isn't decentralization part of the whole plan? And that kind of defeats the purpose of it being decentralized. I'm not really here to debate that. However, the narrative right now is that it is bullish for Bitcoin, and being an ETF that anybody can trade it now. You don't have to have a Coinbase account. And I think that obviously most people understand that the younger crowd, and really anybody under 40 or 50 that wants to own Bitcoin or crypto can own Bitcoin or crypto. But some of the narrative is that now, the 60-year-olds and so on, the boomers can put this in their retirement fund and so on and so forth. And now they don't have to worry about, opening a Coinbase account that they don't understand or something like that. Well, I'm here to explain why that would never make sense and why anyone with their right mind would never, ever do that. So this ETF of Bitcoin is a futures ETF. It is not like a GLD or an SLV that just tracks the spot price, or a USO that tracks the price of crude. It is a futures ETF. And we come into an issue with contango. So let me explain that. For most of you understand, but just to quickly sum it up, with these commodities ETFs, if price goes into contango, which means that the curve is priced higher than preceding months, which often happens, you run into a problem of what they call roll costs. So for instance, we're just going to use crude here because that's the example they're using. You have oil contracts worth $100 a barrel. Before expiration, the ETF may sell those contracts and purchase second month futures contracts for 101. The ETF will be able to buy nearly 1% less crude oil because of the higher price, which equals a loss for investors. And then you have the roll cost. So a monthly 1% cost comes to nearly 13% on an annualized basis, which could wipe out any gains on spot price. So essentially what is going to happen is this ETF is really the only thing that it's good for is short-term trading. It's like a triple ETF on SPXU, VXX, TQQQ. There's not things that you want to hold long-term because of the depreciation. SQQQ, something like that. TWM, any of those double or triple ETFs, obviously it's common knowledge that you obviously don't want to hold those for a long time. More than maybe a month or two. So this ETF will be good if you want to trade it, and it probably will be better than Coinbase if you want to trade it because, for instance, TD Ameritrade, a lot of other Robinhood, tons of brokerages out there basically have 0% commissions, or zero commission fees now. Whereas, with Coinbase, you could be paying hundreds of dollars, depending on how much you're actually trading. And to be honest, I'll trade this ETF. There's times where I don't have a significant amount of money in my crypto account, but I see a really good level on Bitcoin that I want to trade. I don't have time to sit there and transfer money and wait for things to go through and all that. When you're swing trading, those, especially with crypto, those levels go fast. And so this will be a nice, it'll add some liquidity to the market in that regard. Whereas Grayscale, I mean, yeah, we already have Grayscale, but Grayscale doesn't track the price very well. If you look at the low on Grayscale on May 19th to the high on May 20th, you get about 22% bounce. But on spot Bitcoin, actual Bitcoin, the low to the high is over 30%. It's about 33, 34% from the low to the high in one day. So that's how much slippage is being lost on Grayscale. So this ETF will definitely help with that. It'll definitely make it more liquid, and it'll be more convenient for a lot of people. But this ETF does not open up the market to older investors. So let's just be clear on that. No fund manager in their right mind would actually add this to a portfolio that has any sort of even medium-term aspirations. I mean, there's just too much risk involved in it. It's basically going to be a short-term trading vehicle. So this is not like a GLD. It's not like an SLV. It's not like a USO or a UNG or anyone. It's not JJC, copper ETF. It's not anything like any of those. So that's something everyone needs to understand. Now, another thing that makes me a little skeptical of what's going on right now is this is the hype of all hype right now. And we are going to 65,000, and Bitcoin has a tendency to, once it breaks through any resistance level, and a lot of cryptos are like this, they just tend to run. So it makes sense from a historical perspective that Bitcoin could easily just rocket through this 65,000 double top here and never look back. And maybe, it pulls back eventually, maybe to 50,000, 55,000. Maybe it breaks out and then pulls back to 65,000, and that's, your longer term buy area. That remains to be seen. However, there is a lot of hype going on, and anybody who knows anything about how this ETF works knows that it's not going to help legitimize Bitcoin as a long-term investment. So to me, the only concern I would have, and all I'm doing in this video is just trying to urge caution, is that this could be an easy pump and sell the news type of move into a double top. And again, this is not pro or Bitcoin, pro or anti-Bitcoin, anything like that. This is just me trying to make a sober look at the market for everyone here. But I just wanted to put this video out there just so everybody understands that and has a better understanding of how these futures ETFs work. They're short-term trading vehicles. They are not long-term investments. So with that said, I'm gonna get going. I'll let you guys get back to your Sunday night. Come catch me on Carnivore Trades. We'll be doing videos all week long. Come catch me on Patreon, Twitter. Links are below. With that said, you guys have a great rest of your night. Take care, and I'll see you next week.